We can get started here. We'd love to just kind of kick things off with some introductions to our guests here from Stream Finance. So, Dio, I don't know if you want to go first and share a little bit about who you are and what you do for Stream, and then we'll go from there.
Sure. Sorry about the background noise. I'm traveling right now. I worked in trading. I was at Amber for a bit, and then Galaxy. I ran my own prop trading firm called Paragon, which is now managed by my partner. In doing that, I realized that a lot of the kind of financial plumbing of DeFi was really inefficient. And that's what drove me to work on Stream with my co-founder, Salal, who's not on this call. And then, yeah, that's basically it.
Great. Yeah, I definitely seeing a lot of people that come from traditional finance backgrounds or traditional verticals that have come into DeFi and just seen how things could be done better and built it themselves. So I'm happy to
Yeah,
have you as part of the ecosystem and happy to hear about Stream and what you guys are working on. But first, let's kick it over to OMS. Let's hear a little intro about yourself.
Hey guys, I'm OMS.ETH. I'm the head of business development for Stream. And my background was, pretty normie in crypto until I discovered DeFi. And similar to DC, I had a lot of issues, using some of the bigger DeFi protocols. And so when he came to me and pitched the idea for Stream, it was a total no-brainer.
That's great. It sounds like what you're building is probably going to be kind of obvious, right? Of ways that these things could work better. And
yeah,
so,
it feels obvious. It's just a little bit hard to set up.
yeah, I'm sure these things are massively complicated, and that's why we're here to open up a space to kind of help others learn about your protocol and introduce it to more people in the Avalanche ecosystem. So, yeah, excited to jump in. Eric, want to give a little background and then kind of take it away from here?
Yeah, for sure. Thanks, Kyle. For those in the audience, my name's Eric. I'm part of the Avalanche BD team. I lead our DeFi vertical. Been with the company about almost coming up on 4 years. So it's been quite the ride so far. And my background before Alva Labs was in finance, but I was in mostly in consulting for about 4.5 years, doing M&A advisory for private equity as well as corporates. So got to see a bit of both worlds. Crypto is for sure a lot more fun. There's a lot more going on. So happy to be here and be talking to the Stream team today.
Awesome. Yeah, sounds good. Well, I know we just kind of give everybody a heads up. We're going to focus our conversation here with the Stream team. Of course, nothing we say or share here is financial advice, just educational purposes to learn about their protocol. And hopefully we'll be able to have some time to take some questions at the end if the team has time here. So thanks everybody for joining. And yeah, Eric, if you want to kind of kick things off and jump into some of the questions.
Yeah, for sure. And for those in the audience that don't know, Stream launched their Delta Neutral Volt product, a couple weeks ago. And since then, we've been kind of kicking the tires and making sure everything works properly, right? But Diego and I guess OMS, I should call you. Could you maybe like just high level, right? Explain, maybe to the audience, like those who are a little newer to DeFi, like what Delta neutral strategies are, just some different methods to enable, and we can go from there.
Sure. I guess I'll talk about that. Basically, all delta neutral means is that you're effectively making a bet on rates. You're not necessarily exposed to price movements, so you're not basically betting that an asset's going to go up or down. You're betting that one rate's going to be higher than the other rate. And in this case, it's basically your cost of capital, which you're getting from Morpho or from Aave, to go long normally, but sometimes as well it reverses and you go short, versus how much you get paid to go short on a derivatives exchange like a DYDX, a Hyperliquid, where you can get paid 20% plus to go short, and the cost of capital is only right now it's only like 5%. So you make about 15% capital adjusted and leverage adjusted, probably 10 to 20%, and that's how the trade works. So we then package that so that if you want to earn in terms of ETH or BTC, and we're going to start adding new products as well, you can do that too, which is pretty cool. That basically just allows you to earn in USD terms if you have BTC or ETH, and then we DCA that profit back into ETH and BTC at the end of each week.
Yeah, thanks for that. And delta neutral strats are nothing new, I would say, for the industry. I think a lot of funds out there, right? They've been running kind of the basis trades on various exchanges for quite some time now. But I think only recently did it come back into focus, right? For I would say like retail on-chain users with Athena first, and now Stream and various other platforms. Um, and it's debatable too, right? Like Athena, like they're running most of their strats on centralized exchanges. I know you guys take a more like DeFi native approach. Could you maybe like go into like maybe how your implementations vary a little bit, and also like from a DeFi native approach, right? Like what kind of challenges you're seeing as a builder?
Sure. So we only touch, as you kind of touched on, DeFi protocols. We basically search for the lowest cost of capital, and then we find the best place to go short. But then we also have a list of other parameters that have to be met. For example, we don't use AVO because occasionally AVO you can't withdraw and deposit. And since these trades by nature, you have two positions.
I think we're losing you, Diago.
Um, Centralized exchanges and platforms that have no lockup and that are very easy for us to transfer between. We just kind of teased our dashboard that we're working on, which shows all of the positions we do live. We also, for the record, we don't just do perps, which is a differentiator from us in Athena, although I don't really think we compete with Athena. We also do any type of delta neutral trade, which includes like if there's
Kyle, OMS, are we losing Diago here?
Still up as a speaker. Might just be cutting out on the audio.
Yeah, space is rugging. Classic.
Yeah, OMS, we want to jump in
I think,
there.
yeah, I would just give it a sec. He was kind of in the middle of it, but essentially,
Can you hear me?
the arbitrage is a short derivative and a. Oh, there we go.
Diago, we lost you there for the last 20 seconds or so. OMS, do you want to maybe take over for now? I think he might be like in a tunnel or something.
Yeah, that's fine. So I mean, basically, how the vaults work, is as you said, delta neutral strategies. With the rates being double digit APYs depending on the crypto that you're using to get that yield. And the arbitrage is basically just a short derivative and a spot long, where we go short on the perps contracts and we collect the funding rates paid out by the holders of those long contracts on platforms like DYDX and Hyperliquid. And then we'll go spot long to cancel the exposure from the short position, and then just collect that yield and share it with our users. And there's kind of a way that obviously users are able to do this themselves, but we have a dedicated team, and we're in process of automating the entire thing to make it as efficient as possible. And it's definitely a strategy that you have to be nimble with, in the sense of you have to be able to switch platforms and switch positions at a moment's notice. So, yeah.
Awesome. And Diago mentioned that like you guys don't like really see yourself as competitors to Athena. Could you maybe elaborate that a little bit?
Yeah, I mean, so we use a bunch of different chains that Athena doesn't, as well as we're looking to get another segment of the market and also beating their rates.
Yeah, and I know that they like are mostly on centralized exchanges. I think there's some like volume on like something like DYDX. I'm sure they're going through everything like the proper way, right? But I think
Of course, yeah. I'm not trying. Yeah, I'm not trying to disregard them in any way, shape, or form. But our focus is really decentralized, and our as of right now, we're fully decentralized, and that's our aim is to be kind of DeFi primitive. We also aim to be a platform, which they're not, and we're also not a stable coin. We don't think that's a very good business to be
yeah,
in.
for sure. And that sort of marketing is I've always viewed it as a little problematic. And I'm with you there. Like I, obviously oversee like the DeFi ecosystem here, right? So I love to see everything be on chain to the extent possible, right? Um, so that's always good to be with a team that shares that ethos to an extent.
Yeah, exactly. And principally, I mean, obviously, the vault system is I think probably the best thing in the marketplace. But we're also primarily building our perps exchange.
Okay, awesome, awesome. And yeah, we'll get to that in just a sec because this is I think probably one of my first times like talking to you guys about that too. So I'm excited for that part. Um, but I
Nice.
guess like going back to the Vault product, could you the implementation of Avalanche currently, you deposit USDC and then or other assets, I think, right? And then you basically take a delta neutral trade across perp dexes and SPA as you mentioned before. Could you maybe dive a little bit into the product? What are some of the yields, like historical, no forward looking stuff, historical yields you've seen running that strategy,
Of
and
course.
kind of where you've seen the most traction.
Yeah, definitely. So obviously, past performance is no guarantee of future returns and all that. But our USDC product is averaging, I think, between 35 and 40% yearly, which is pretty great. Our Ethereum product is averaging 10 to 15%, and our Bitcoin product is 5% APY, which is a lot more interesting than a lot of the other competition out there. Not to name names. And also, we have a dashboard, which our amazing developers just cooked up, which is absolutely gorgeous. I mean, you want to like frame it and put on your wall. And that'll basically track everything that the vaults are doing at any given time. And I'm expecting that to be live pretty soon.
Nice, nice. And I noticed you get like this like Lev USDC. Oh, what is that exactly? Is that like a receipt token, like kind of similar to like when you deposit into Aave or into LP pool? Can it be
Yeah,
composable?
exactly. Yeah, so it's like a stream token that represents your ownership in the vault product, which then once the withdrawal process happens is exchanged internally.
Nice, nice. Yeah, we gotta get that more plugged into other DeFi protocols here. I think that's probably the next step after the revamp.
Yeah.
Okay, awesome, awesome. So maybe we can move to the Dex a little bit. Could you maybe give us like the high level and like what it is, like how it differentiates from kind of existing Dexes out there, and then we can dive into the details after that.
Yeah, so I think the main theme of our DEX product is probably capital efficiency and in market making. And so right now, market makers are forced to execute these carry trades on a bunch of different protocols, and that like kind of lack of interlocking creates a lot of unnecessary liquidations and kind of slows down the entire process. So we're bringing the idea of a CFI exchange onto the chain, um, and that a lot of these other issues kind of explain why the funding rates have been higher on dexes than on centralized exchanges.
Okay, and I guess like
We use Cosmos for our settlement, and we're secured by Eigenlayer via Ethos as well.
okay, gotcha. And I guess like when it comes to like Avalanche users, is there like a front end or something that they can access to execute trades?
Yeah. So you'll be able to essentially just plug in, no matter what platform you are on, the stream platform, and it'll all kind of look the same for the end user.
Okay.
It's all interoperable.
Gotcha.
Yeah.
And why now in terms of like kind of like the priority? You guys could have built any product, right? But why now? Like, improve perp decks. Was there an opportunity you guys saw in the market?
Yeah, I mean, obviously, with Perpdex volumes, they've been down kind of, or they were down at least a month or so ago, because of the market's interest in meme coins and a lot of the products out there just really not being, I guess, intuitive for the users. And essentially, we just saw a market segment that we could disrupt, and we thought there would be a great opportunity for an actually great user experience and market maker experience on a DEX on chain. So that's why we did it. And I don't really think that that's a product that is too, I guess, exposed to the cyclical nature of the market. I think it's just kind of a quality thing. And then based on the delta neutral vaults that we just discussed, we can leverage that to build a extremely efficient and valuable DEX with sticky liquidity, right?
Yeah, for sure. And one of the main complaints like we get from like market makers in particular, or like professional traders, right? Is like each perp decks out there, they have to take time to integrate, and some of these like the easier ones are probably like a couple weeks maybe, but some of the more difficult ones, right, could take months. So um,
Yeah,
that's something
exactly.
that's always like kind of top of mind.
Yeah. So, I mean, essentially, it'll all be on one platform where you can lend, borrow, and trade, which I think will allow market makers to be a lot more profitable, and efficient. Um, yeah.
Okay, awesome. And you guys, I know you guys are like teasing points on the site. Are you guys thinking about a platform token for Stream as well?
Um, I'm honestly not too sure what I can say, but there will definitely be a points accrual system for those who are early adopters. Um, and we're definitely paying attention to other players in the market on what not to do. That's what I'll say.
Yeah, I think there's a lot of pretty recent case studies out there. I know like some protocols, they partner with others, right? Like Athena, I think they have like this like questing system where you go on different DeFi protocols and use different DeFi wallets, and the others are more direct, right? Where you have to use the platform, to get access to the points. Do you know, like, broadly speaking, like what kind of strategy you guys are gonna roll out with?
I can neither confirm nor deny, Eric.
Pretty tight-lipped here.
Yeah, it's a good product. Use our product. That's all I can say.
Okay. When do you think we can expect it to go live?
Yeah, so I think we're gonna have our MVP product probably out within a couple weeks, and then as we go, um, we'll just be tweaking and adding features along the way. What I can say in terms of the points is that it's not going to be you're not going to be able to Sybil attack it, however you want to say it. And we're going to focus on the size of our deposits within our vaults, and time duration.
Gotcha. Yeah, that would probably benefit the power users more than anything on the platform.
Yeah, exactly. And also, when it comes to the platform, I think we're gonna have to go through probably 1 or 2 weeks of audits, and then it should be live within a month or two.
Do you have a sense of like what kind of trades users can open? Is it going to be like cross margin ISO? What can we expect from a trading experience?
Yeah, I think all of the above, right? It's going to be a CeFi user experience, but using DeFi only. And everyone's going to have essentially one unified trading account, with access to a lot of lending providers and no tail risks within that. And then low funding rates, extremely liquid, high leverage, and cross margin on the account.
Gotcha. Is it going to be like, do you know if it's going to be like an order book based model or more of like the virtual AMMs you see out there?
Sorry, could you repeat
Like
that?
how do you I guess how is liquidity provided on the platform?
Oh, there's different collateral types, and I'm pretty sure you're gonna be able to choose what you want to use as your collateral.
I see. Okay. Yeah, that's super exciting. I mean, I think we're seeing like a lot of different variations of perp dexes coming. Well, they have been live, some of them for a while now, but there's obviously newer ones going live. Some are taking like, and I think this all got started really with probably GMX, right? Like in the back almost back at the tail end of last cycle. I think it's interesting to see all the variations and with some of the newer technologies like account abstraction and gasless transactions, you're really able to like kind of mimic right the look and feel of a centralized exchange. So it's exciting to see the industry kind of getting developed that way. And I think a lot of a lot of centralized exchanges are also like hedging their bets. You see pretty much every centralized exchange these days like launching their own chains, sometimes their own dexes on those chains. So it's I think we're seeing that transformation in real time.
Yeah, definitely. I wonder if Dio could join back, because I'm sure he'd love to answer some questions.
I know. I've been talking to Dio forever, and then the space is just rugsome.
I invite him to speak again if it does connect, so we'll see. But I'll be checking.
Okay,
Oh
awesome.
man. OMS, how did you and Dio and I guess like maybe the rest of the team also get together because I know like a lot of you guys
Like,
are
can you guys hear me all
pretty
right?
fresh. Some of you guys are pretty fresh out of
Oh,
school,
there we
right?
go. Yeah, yeah. So it's actually a lot of us met through different blockchain clubs and friend of friends, crypto events, classic
I'm actually
Telegram
going
group
to
chats.
Dartmouth right now. That's why my signal's pretty awful.
Yeah, he's going to the blockchain club there right now to try to meet with some developers.
Nice, nice. That's pretty it's pretty grassroots recruiting.
I mean, it's worked
Exactly.
pretty well so far.
Yeah, yeah.
I think that there's a lot of people that you look at their LinkedIn and in theory they don't have a lot going for them, and then you meet them and it's just such an obvious person to work with. Like our Solidity guy, Dro, he can launch. Like I think for you guys for launching on AVAX, it took him like 30 minutes to launch with you guys. But that's partially a testament to Avalanche, but it's also a testament to just how fast that guy is. But you look at his LinkedIn, and it's like, oh, well, he only was an intern at Layer Zero. And if you're just skimming through the resumes, you just assume that he's not uh, like the same caliber that he actually is. So I find it super helpful actually to go to all of these.
Yeah, I think that's the issue with crypto recruiting. It's like, you want crypto native people, but those attributes, right, like or skills don't really show up on the resume a lot of times. Like you really have to like, get talking to them. And here, like most of our interviews are like virtual as well. So like you don't get to like see the body language or anything, right? Like is this a nervous person? Is this, does this person have confidence in what he's saying? So it's you can see the challenge there.
Yeah, and you also, at least when you're starting out a company, you also have to get a special type of person that's not, which is kind of hard to get in crypto, good devs that are willing to take a risk, which like everyone on the team with us is because they've all dropped out of college. We're almost all like, I think we're from the 19 to 22 age range, the entire team, um, which obviously for a lot of people on the team is a massive risk. And then they also obviously have to be good and they have to be hungry for it. And it's really hard. We probably have gone through like 3,000 people to get to the team that we've gotten now, if that makes sense. Like it's just kind of a grind to find the right people.
Yeah, I think we definitely need some new energy in the industry. I remember like someone tweeting recently that like a phenomenon he was seeing is that like a lot of the ETH community, like the OG ETH community from like 2016, 17, right? They've gotten comfortable and for a lot of times, right, like they've turned into like more influencers or like thought leaders in the space rather than builders. So it's always good to see like kind of the new generation come in.
Yeah, and I think if you're taking an approach as kind of an outsider, you are able to see a lot of issues. Like for me, the product that we're doing, both from the yield perspective and from the platform perspective, makes a lot of sense. It doesn't make sense that in an industry that's supposed to be decentralized, no one can access a decentralized market making style vault. And the only way you can earn significant interest on like BTC and ETH is if you set up an institutional Coinbase account. That makes zero sense. And from a market's perspective, it makes no sense that all of the DeFi protocols that we have essentially don't allow you to hedge out your exposure when all markets are basically driven by some kind of hedging. In most markets, you're not fully hedged out. You're taking some directional risk, but you're hedging via some kind of high beta or something like that. But even if you could in DeFi, they just don't let you right now, which is kind of insane. And once you solve for that, you can solve for having basically a product that's decentralized but has the same kind of competitive edge in terms of funding rates, liquidity, etc., that a centralized product would have,
Yeah.
which I think is very interesting.
Yeah, I think the tech is getting there. I think the chain, from a chain perspective, but also from application builder perspective, right? And I think I like that you guys are non-compromising when it comes to like kind of staying true to DeFi. Before you dropped deal, OMS and I were just talking about the new decks. I was wondering if you had any thoughts you wanted to share on that new product. He was being very cagey about the point
Sure.
system, so I'm not gonna question more there, but I'd love to hear more about the
No,
product.
the point system. Obviously, we're going to have a point system. It's time weighted. So what that means, and then also it's not, you can't silo it at all. You're If you have the exact same amount across multiple different wallets, it's not going to change how many points you get. The end product is basically, in a world post FTX, it doesn't really make sense why settlement isn't happening in a decentralized way, especially since a lot of different exchanges basically and wallets got totally burned during FTX. And so what we're basically doing is I looked into why that happened. Basically, why didn't people start to switch to DeFi? And it was just an issue of DeFi was not efficient enough yet. And so that's what our product is basically aiming to solve for. And we actually aim in the future for smaller centralized exchanges to start to use us as a settlement layer instead of having to use a centralized exchange or a market maker. They just route orders through us. They keep custody of their user assets. And by doing that, we're able to access millions of users indirectly. And they get to use DeFi without even really realizing that they're using DeFi, which I think is the way that DeFi should work. People shouldn't be actively thinking about the tech. It should just work.
Yeah, definitely agree there. And we're super excited, for that launch. Excited to get my hands on it. I've used like a lot of perp dexes across different ecosystems, and then I think they all have their pros and cons, right? Like some they both from a trading
Yeah,
experience, liquidity, etc.
yeah. There's a lot that have very different approaches to liquidity. Hyperliquid, obviously, their guys are more HFT. DYDX guys don't really have a very different approach to liquidity in that they just think people hedge off their chain. I think that there's a lot of dexes that are launching basically just saying, we're going to be the perps dex of this chain or of this chain of this chain. I don't think that really makes sense. All you need to do in order to integrate deposits from another chain is just to be able to allow for those deposits. Like the signing of the transactions and the sending of transactions, all like the logging of that for deposits and withdrawals across multiple EVM chains is super easy. So I think the one thing I would say is like there's a bunch of different variation when it comes to actual models. But if you hear a DEX that's whole pitch is basically, well, we're a perps DEX on insert chain name here, it's probably not a good idea because they're going to have a very limited market. And as soon as one other perps DEX gets involved on their chain, they could easily get wiped out by the liquidity that that DEX can provide.
Yeah, and when you guys were designing like the overall architecture, what I guess like which perp dexes would you say you drew inspiration from or took pieces of? I can see some similarities with some of the existing ones out there, but I'd love to hear from you like what kind of design choices you made there.
So it's a bit, we didn't really take inspiration from any one setup. Um, I was doing some kind of carry trade stuff when I was at my trading firm. And I was thinking while I was doing it in DeFi that it would make a bunch of sense to create a platform that kind of manages parts of this naturally. Because if you're, short 100 ETH in perps, but you have 100 ETH, you can't show any major DeFi exchange that you basically are fully hedged out. But so as a result, if the price moves too aggressively for ETH, you can get liquidated. And then if it moves back down or back to what the price was before, you can get liquidated on both sides of your position, which is a horrible loss. So I basically wanted to solve that problem. And then there's aspects of it that are similar to Hyperliquid. The yield vaults are essentially going to turn into hedged HLP style vaults. But unlike HLP is kind of quantitative and high frequency focused. It's by their own admission something that's meant to provide not fully hedged when they take on positions, as investors at some point knows. All of the positions that our vaults will be taking will be fully hedged on platform via spot or via lending or via other venues. So that's kind of how we're approaching it, is how can you make a platform that allows for liquidity to be provided in the most efficient way possible, while also doing that in a way that doesn't have to come at the expense of users in terms of funding rates, etc., which is basically what the house and the GMX and Hyperliquid models do.
Yeah, for sure. And I can definitely see like the synergy between like kind of what you guys have on the Delta Neutral Volt side, right, and the perp decks. And also like I'm curious also like how the overall if you guys do a token for the overall platform, right, how that utility will play into all this. So
Yeah, to be clear, obviously being careful, but if we were to do a token, I've written about this on my Medium, people can see it as well. I think that a token is a value accrual mechanism. It should essentially be it should be able to decide on all governance decisions, fees, and all revenue should accrue to that token. So you can kind of equate it to something like a maker or a Lido, if that makes sense. That's kind of how we're looking at it. We're not looking at it in like a Uniswap style way, where there's like a very strong division of how revenues, some revenues are going to one entity that's not owned by token holders, and we're very much focused on accruing value to any
yeah.
token holders if we're able to launch a token, obviously, because that's a if. We don't know if tomorrow Gensler says tokens are illegal, and then
Yeah.
so just to be clear on that part, obviously.
Yeah, for sure. And I think a lot of the funding rounds we're seeing these days, they're dual equity, like you just say, plus like some sort of token warrant, and from that perspective, right? Like I see why projects do that. It's because usually they're pitching to crypto native funds, but then more broadly speaking, like crossovers or more Web 2 focused funds, right? And I think it's something we always tell projects is you need to think about like where the value accrues, right? And kind of and that should be
Yeah, and
central to your
you
pitch.
could you can kind of think of it, you're setting up like a lab style entity when you're initially setting up a startup. So that's where the cash is going. So it's natural that VCs want some kind of ownership over that vehicle because essentially at the start, you're leading the way when it comes to the development of the project. You do have to think about, in the end, how's development going to continue. But I find it very hard to believe that people that are token holders in those projects where they have a good reputation the with the team or they work with the team a lot are not going to be like, okay, like the DAO or whatever kind of structure ends up taking place shouldn't work with the team that built the entire product out. But you have to manage how that ends up working out just so that you avoid, there's a lot of governance that happens that can be very net negative for token holders. And there can be a lot of kind of fake governance where it's just a few insiders that are taking advantage. I think the best example is probably Maker, and then maybe Lido for how to manage governance, because Maker sets up pretty good. Lido has some issues, but Maker has some good sub DAOs and stuff like that that are able to be pretty good at delivering stuff. Whereas you get other DAOs that spend an absurd amount on funding, and then basically like 30%, 40% of all of their spending is on admin, which is just absurd.
Yeah, and some DAOs, for better or worse, are really just like theater, right? From to fulfill like certain regulatory requirements.
Yeah, I remember one of the things that our trading firm was known for was kind of DAO restructuring, and we were looking back at previous votes, and we saw these people delegating to their buddies, and then their buddies would use these guys' votes to vote on their salaries or giving money to their new company, which is like it's very much
Yeah,
theater to like a ridiculous extent.
yeah,
And I don't think that was even necessarily malicious, but although yeah, I think for some of the people involved it was malicious, but there are even worse cases of that all across the space, and you just have to find a way to police it.
yeah. At the end of the day, like if you have a token, you just gotta use it to align incentives. I think
Yeah,
GMX when it launched, like I still don't think now like the token plays a huge role in like DAO governance. But what it did was it created all the incentives went to the token holders or the token stakers, I guess in their case. So the team obviously had allocation, their users, the liquidity providers had allocation, and then obviously the speculators out there, right? They see that kind of value, and then in the bear market, we saw that token basically outperforming the entire market. There's a lot of they had a lot of per
yeah,
volume, and then, but more importantly, everyone was aligned in terms of what they should be doing there.
yeah, and I think that's really an art of being able to decide and figure out how you manage who your stakeholders are. I think Athena did a really good job at
Hmm.
that in terms of incentivizing liquidity provision, incentivizing lending liquidity, incentivizing all of these different stakeholders that they're going to need. Um, and I think Blur to an extent too. Um, Blast also to an extent too, but I think really Athena did really well. But yeah, to your point, GMX did a really good job of making sure that they get the right people basically on board, because at the end of the day, all governance is only as valuable as the people that are involved in it. And if you don't have the right people in the room, it's going to be pretty hard to have good governance.
Yeah, 100%. So I think we're about 40 odd minutes in. We cover a lot of topics, honestly, here. For everyone out there, the Delta neutral vaults are on for stream protocol dot money are live today. Perp decks coming up, and with that, right, points program as well. Dio, do you have any last thoughts? I know we missed you for like a good 20 minutes in the middle.
Yeah, it was I was furiously trying to get back in. No, I think basically, if I wanted to distill what we're doing down, is we're trying to create an experience that's almost that if you were to use us, you wouldn't have any kind of opportunity or at real cost compared to using a centralized exchange. And you have no tail risk at the end that an FTX style or Mt. Gox style event is going to happen. So I think that's basically what we're trying to do. And we want to be a kind of NASDAQ or ARCA settlement layer for these kinds of transactions. And the liquidity provision vaults and the yield that comes from that is just the start of that kind of process.
Awesome. Kyle, I don't know from your end, do you want to maybe open up for audience questions?
Yeah, let's take a question or two. We want to see if anybody has any questions they want to ask the stream team. Again, like Eric said, lots of topics covered here, both in what's already been launched and what's coming up. So some exciting stuff there. If anybody has any questions for the team, we'll take one or two here as we wrap things up. And we want to make sure that we honor our guest time, and they're both busy, so let's keep our questions focused on stream here. And if they have questions about the protocol. So we got one requested up here. So we'll see if you have a question. And then anybody else that wants to pop up as a follow-on question, hit the mic button on the bottom and request up so that we can add you up here before we wrap things up. Our friend Sticky here it's loading, it's connecting, trying to get you up here to ask a question. But in the meantime, if anybody else wants to kind of come on up, just request on up and we'll call you up. If not, what we're going to do is we'll have the recording of this available on YouTube probably in the next 1 or 2 days. So we'll share that out on our social accounts so you can re-listen in, share with your friends, and kind of dive into the intricacies of what was covered here. It looks like his account's not going to connect here. So damn, space is always rugged. It dropped off. But yeah. Let's wrap things up. Appreciate your time. DC, hope things go well over in Dartmouth. Good luck with the recruiting process. Hope you get some more good devs over there. Anything else you wanted to share before we wrap?
No, thank you so much for having us.
Yeah, thank you guys so much.
Yeah,
thanks for coming on, guys.
Appreciate it. Yeah, we'll have you on again as more things develop and more things get launched, but appreciate you coming on and sharing with us, and we'll talk next time.
Awesome. Sounds good. Have a good one, guys.
Thanks everyone for joining. Take care.